Well, good morning, everybody. I wanted to go ahead and shoot a quick video for you on a couple different fronts. First of all, you recall from the weekend video and the videos that I sent out last week, big concern that I had was this area right here with the previous resistance. So we talked about that at length. I showed you some underlying indicators and other underlying tools were helping me identify, yes, we were making higher highs up here, but we were making lower highs in some of the videos in the tools that I had shared with you in the last video. So I just wanted you to go back and watch the weekend video, watch last week's video. You'll see what I'm talking about there. Also, from another form of divergence, of course, was market divergence. Here we had this previous high in the NASDAQ, and while we had this rush, which on this S&P was trying to make a new higher high, the NASDAQ was just not coming around with the party. That's something I previously talked about before. You really want to see, especially something like the NASDAQ, going with you. So otherwise you get worried about what they call painting the tape, where it looks really good to the average John and Jane Doe citizen out there, but there's underlying messages that, hey, things aren't quite as healthy there. So a couple things that were happening there. Now, as we bring it down to then like the hourly level, because this is important, we had a confirmed negative divergence on the SPY prior to the gap down, right? So we always want to watch for those kind of things. And then as we're looking at the NASDAQ, part of what I want to talk about with this is, on Monday, what we ended up having was something that kind of concerned me, and I wanted to really bring it to people's attention, was that while the market was going back up, it was still doing so with a whole bloodbath of downtrend. You recall during like the Wealth 365 Summit when I was doing those different classes that I did throughout the week, I'm like, if I'm looking to go long, I got to see green and green. I don't want to see red and red. That's not what I want to see there. And so trading against that hourly chart, going long into this, unfortunately caught a lot of people on Monday in a very nasty whipsaw and bloodbath there. And so it's not until we go back to that green and green on like that hourly chart, then I can start feeling a little bit better, like here on Tuesday, having the wind to my sails, and then starting to look for long side trade opportunities, because then I have more of that long side wind to my backs in that case. So that's just a real key piece that I want to make sure everybody understands. Obviously, we want to look for the same types of strategies we talk about, right? Trend resumptions, right? The trend resumption trades, the wealth signals, the breakout forecasters, the champion trend, the champion cross, all those things firing off. And then that can lead to some really wonderful higher probability trades when you're going ahead and getting those kind of areas. That's a much higher probability trade than going ahead and trading long into this bloodbath, falling resistance on top of you. It just, I really want to emphasize that to you. I know it's something I taught a lot at the Wealth 365 Summit during those different classes, but I really want to emphasize it to everybody in case you weren't able to make one or more of those special classes. Because it really can make all the difference statistically and probability-wise. And the problem is, of course, Murphy's Law, right? People will go ahead and they'll do heavy contract size trading against the predominant trend, take big losses. Then when they go back and do it right, they'll do little contracts and really small and take quick profits because they're so burned because they lost a lot of money over on this side, right? And so they're really jittery. By the time they do something over here, they take little baby profits, right? And so it's exactly the opposite of what they need to do. So little you can't even tell it's a dollar sign. So the point is that what's that hourly chart doing, right? And kind of match that up against the lower time frames for those of you trading on the intraday basis. But again, even on the swing trading basis, we had talked about this at length in the last two videos that I shot for you. And so go back and watch those videos because it's important to understand what we were looking at and why in that case, okay? And then just want to add the additional about multi-market confirmation as well, which is something I've hit very heavily in previous videos. So all these videos kind of build upon each other, so learn everything you can from them. So as we go into today, obviously with economic and FOMCs, things of that nature, the way I typically try to focus on the FOMC, I know some people that are kind of trying to do like trade qualifications. They're hoping to get a big win right at the news release. That's not the way I go and trade, because that's not really great for longevity, because you don't see those kind of trades every day, and that's not really how most people are going to build their financial future. You only have those FOMC announcements so many times a year, 8 or 10 times a year, and so you can't count on those really anyways. And then what if you get it if you're on the wrong side? So a lot of people kind of use that as more of a gambling tool. From my perspective, which like prop firms, of course, frown on, and then of course those you trade in your real money, as you can see, it could be a real toss-up. So what I like to do is let that information go ahead and come out, let it have its spikes back and forth, and then see after a push up, push down, or if it's push down, push up, then see then if after the first several minutes, a real trend starts to present itself in conjunction with some of the other key indications that we're looking for. So I just want to I'm not really looking to trade that right into that because that's not really a sustainable way, as many people have found trading right at the U.S. Open. This time you can get the trade and it will whip up your favor or down your favor, and then the next time it just V spikes the opposite direction against you. So I really focus on the areas of much higher probability and sustainability versus the whipsaw volatile areas at U.S. Opens, economic datas, and when some of the key time frames, as I was showing here, don't align. So I just kind of want to lay out the strategy, what I'm looking at going into today with the economic data on that, and then also just in general key strategies to be focusing on here with these wonderful volatile times that we told you there was going to be post-election and that we're just getting started. So much more to come. I look forward to seeing you in upcoming videos. Just want to do a little early morning video for you today to kick off your day. We'll see you shortly. Take care. Thanks for being the world's greatest students. Bye-bye for now.